at Ethos Ltd joins us now. Mr. Saboo, hi, good afternoon. Thank you so much for speaking with ET Now. Well, Q3 performance was rather strong on account of the wedding season, but given the fact that there is a bit of spillover in Q4 as well, should we expect the momentum to continue in Q4?
We certainly do. We've had a fantastic January, so we certainly expect the momentum to continue. I just want to add that the Q3 performance has not only been a record performance, but it's been on the base of a record previous year Q3. And all the last 4 quarters have actually been record quarters. So this really underlines what we've been saying, that there is a very, very important and a strong long-term growth in the business of premium and luxury watches in India. We are still very small compared to the global levels, and the interest in this product group is growing very, very strongly and steadily in India.
Good afternoon. This is Cheryl also joining in the conversation, and we can see that sort of a demand trickle into your earnings, and you also have the margins that have increased on a year-on-year basis, and this is due to the higher share of luxury watches and in-house brand sales. How confident are you now that this margin level will be sustainable going ahead? Can we expect the margins to remain in this high double-digit teens rate for now, or do you expect to surpass it or stabilize from here on?
I think we're looking at stability in the margins. We've achieved margins that we were actually expecting to achieve a year from now. So it's actually a very, very healthy sign of margins. Do we expect margins to grow? Not dramatically, but we do believe margins will grow, will inch upwards. At a PBT level and an EBITDA level, I certainly believe they will go as operating leverage kicks in. As you know, we're going to be expanding by 35 to 40 stores over the next 18 months. So we certainly expect operating leverage to kick in significantly, and the margin at EBITDA and PBT level to increase.
So you talked about your store addition plan for the next 12 to 18 months, but what about the SSSG estimates? I believe that earlier you were talking about a 15 to 20% SSSG level. Is it likely to be in that range or going to be better than that?
Q3 RS same-store growth was about 16%, which is extremely healthy. So we're expecting a 20 to 25% overall growth, and our projection is that the same-store growth will be between 12 and 14%, which is also extremely good. And the rest is going to come from new stores. But what has happened is there's been a delay in some of the new store openings because some of the malls that we've signed up with, they've got delayed a bit. But despite that, I think our same-store growth has done fabulously well. Our marketing programs and our sales team have done exceedingly well. So we've been higher than our projected same-store growth and made up for the fact that some of the stores have got delayed. Now the stores are coming on stream, and in the next couple of quarters, you're going to see not only the same-store growth, but also growth coming in from new stores. Another point which I want to add is that in the new structure and metrics that we are working with, our stores, we aim for our stores to achieve a high ROC within the first year itself. Earlier, we used to work on a goal that in the first year, the stores will break even. Now we want them to achieve a high ROC within the first year itself. And the best stores, for example, start to become profitable within the first quarter. So that's good news for the new store openings as well.
So correct me if I'm wrong and if I've got it wrong, Mr. Saboo. So your earlier guidance for same-store sales growth was around 15 to 20%. Are you saying that now you're expecting to come in around a 12 to 14%? Did I get that right?
No, I'm really not sure where you got the same store growth for a long term to be 15 to 20%. We were expecting so this year, for example, our total turnover growth will be about close to 34, 35%. We expect long term, next couple of years, sales growth to be in the 20 to 25% region. Same store, we've actually always said it's going to be in the 12 to 14% range. That's where it's going to be. The total growth, we've expected it to be in the 20 to 25% growth. This year, it's been 34. We're going to obviously try to maximize it, but same store is going to be more in the region of 12 to 14%.
Then I stand corrected on that particular front with regards to your same-store sales growth, and given the fact that you've given our guidance on where you expect the total growth as well. Let me talk about the further diversification that the company is doing. You all are trying to diversify into these international branded jewelry, as well as you have the travel accessories as well. Where do you see this sort of segment growing? What sort of a growth have you envisaged on this one? And is it working well for the company?
Well, it's still very early days. We haven't really started on the travel retail. The store has still to open because the mall has been delayed by about a year. But it's going to open in the next couple of, I think, 3 or 4 months. We expect an extremely healthy growth in the travel accessories. Jewelry will be off to a slow start, but jewelry is going to be a huge market going forward. So it's going to really start to move the needle, let's say 3 or 4 years from now. We still have to learn about jewelry, about international branded jewelry, but it's the biggest growing thing internationally, and I'm sure it's coming to India as well. For the next 2 or 3 years, our biggest focus is going to be to maximize the potential in the premium and luxury watch business, which is growing in India in a healthy pace, and we are obviously growing much faster than the overall market. So that's going to be our prime focus. On the other hand, travel accessories will be profitable and it will grow fast. But again, these are early days, and in the overall scheme of things, you're going to start seeing them move the needle in about 18 to 24 months.
Street is definitely excited about that. We'll probably have to wait for 18 to 24 months to get more clarity. Thank you so much, Mr. Saboo, for joining us today. But shifting focus to what's happening in the metals arena, because there's a definite